Hello, friends. This is Deepak with Tax Code Advisors. So, in today's podcast, I want to talk to you guys about how some people make very silly mistake that ends up costing them tons of money. Now, those of you guys who come to our live events or our seminars or webinars, you notice that we often try to bring in other vendors to present you with some opportunities that allows you to kind of look out and investigate some of the other things other than Wall Street. I think everybody gets Wall Street, everybody gets real estate, but the world is so much bigger, right? There are small businesses happening everywhere. There are some, you know, creative ways to make money that people are taking advantage of. However, uh, when we are driven by greed, when we are ready to make investments and we want to make money, oftentimes we ignore risk, and this happens especially to the partners who try to bring us some interesting deals. So this is what happens. Somebody partners up with somebody else. Maybe somebody needs to raise capital. They partner up with people that, hey, can you help us raise capital? They partner up because they're going to make some good money out of it. And then they start going around meeting with people who are connected with the local community and pitch them their product. Hey, we are building this motel, we're building this hotel, we are building this apartment complex, we are doing this, we are starting this business, and so forth. And as these people start to make those pitches, many, even let's just say even professionals, kind of fall for it. Why? Because it sounds like a good deal on the surface. And during this entire conversation, they forget a very important word, which is risk. RISK, risk. You need to be able to figure out what is your risk. And when I ask this question to these people when they try to pitch their products or services to us, what is our risk? They often underestimate it. The answer always goes something, oh, there is no risk. Oh, it's very minimum. We've been doing it for a while. You know, that's not really true. Risk always exists. So let's say if you're starting out building your wealth right now, okay, and I want you to think about this and answer this question honestly. If you're starting to build out your wealth right now, the most common question you're going to ask somebody, how much can I make? How much can I make? Are you one of those asking that question? If you're asking that question, that means you're still learning how to make money, how to build your wealth. If you've been in market for a little while and you have lost some money, you have run some experiments, you have talked to some other people who offered you some opportunities, that means you have elevated your educational level. At least you understand finances, how the financial statement works, how the profit and loss statements work, how does do run some background check and so forth. If you're at that level, then you will ask a different question. You will ask, how much can I lose? How much can I lose? So you got two type of people. How much can I make? How much can I lose? If you're, think about that for a second, what question you're asking. If you are one step beyond that, that means you have carried sufficient knowledge now about making some good decisions. Then the question you will be asking is, can I afford to lose that much? Can I afford to lose that much? So it's kind of like chess. How far into the future can you see? Obviously, if you can anticipate other moves, then you can make better moves, essentially protecting your territory. So these are the three important questions. How much can I make? Now, I'm not saying you shouldn't ask. Yes, you should ask. You should know that. How much can I lose? You should know that as well. But you should also know, can I afford to lose that much? So let's say if I pitch you an opportunity and I say, look, here's a great small business. It costs you $500,000 that produces 20% return on it. Okay. How do I know that? Because it's historically been doing that or other people are doing that. Sounds like a good deal, right? I say, hey, look, I'm starting this business. Would you like to partner up with me? So you might say, well, Deepak is a great guy. He's a tax guy. He knows finance. He has business background. He has run businesses in past. Sounds like a very good guy. Maybe I should join him on this venture. I think I can make some good money because that 20% carrot sounds very, very good. I'm telling you to stop. You don't have the entire picture. Okay. You do not have just slow down a little bit. Next question you want to ask Deepak is, hey Deepak, this sounds great. It's an awesome opportunity. Sounds like, how much can I lose? Now, the answer is very simple. If you're putting $500,000, do you know how much you can lose? $500,000. That's exactly right. 500. You can lose everything. So when people tell me, "Oh, there's no risk. I can't lose that much," and it never have happened before. It's all BS. You can lose. I mean, that's what investments are. That's what businesses are. Sometimes they work. Sometimes they don't work. So you need to be prepared to accept the fact that you can lose every single penny. Okay, so far with me. Lastly, now this is a question that you need to answer to yourself. Hey, can I afford to lose that much? Is it in my territory? What would it happen if I lose $500,000? What would that do to me? So let's just say the answer to the third question comes to you and you said, no, I can't afford to lose all $500,000. You know, um, if it was $100,000, maybe I could do it, but not $500,000. Even if there's a slight chance, maybe 5% chance, 10% chance, I still don't want to do that. Well, in that case, you should not invest $500,000. You should invest what you're comfortable losing. Because if you do that, you will have some stability in your life. You'll be able to sleep better at night. If something goes wrong, you'll be able to get back on your feet and run again. So how much can I make? How much can I lose? Can I afford to lose that much? If somebody try to pressurize you that, hey, make a sale right now, you're going to lose a lot. That's not a good sale for you anyway. If a good investment can wait a week, a month, even a year, then it's a bad investment to begin with. Now, I know some of you guys will start yelling and screaming and say, look, what about the opportunity cost? Look at the real estate market. It changes a lot within 1 year. Same thing with stock market. Yes, all of that is true. But still, right? It's not, like I said, the question is not how much can you make. See, all of those comments goes back to that same thing. How much can I make? What you should be thinking is how much I can afford to lose, you know. And if that number is beyond that threshold, you really need to slow down. Now, there are many reasons why people lose money in investments, in businesses, all that kind of good stuff. But I think there are some important elements that we have seen happening over and over again, and people don't recognize that. So now, before I tell you about those, so you can watch out for them, I want you to remember when you come to our events and somebody is presenting an opportunity, just understand it's just an option. We are not endorsing it. We're not telling you it's a good investment. I might say something like, well, I know this guy or gal, or, I have personally invested in this. All of those statements are just what I'm saying. It means nothing. That should not impact your decision making in buying into that product, buying into that pitch, investing with them, or partnering up with those businesses. It means nothing. You need to do your own research. You need to ask your own questions. It is possible that I might have missed something, you know. Uh, So don't just assume that if somebody is showing up on a stage with us that they are the perfect ones. Although when people do come with us, I tell them what not to do. I tell them, hey, you cannot oversell. You got to show things as it is. You cannot hide things. I have I go through like an entire lecture with them to make sure that they're looking out in your best interest. But at the end of the day, everybody's a salesperson. They need to do a sale, and that's how they make money. So whether they like it or not, people often end up overselling. And, my job at Tax Code Advisors is to look out for your best interest every single time. And that's why I say no matter what somebody's trying to sell you, don't buy it. Don't buy it. Just give it a minute, relax, and look at the data. Okay, very important. So having that said, I'm going to give you some tips what should you pay attention to. Let's start off with real estate or some sort of investment that you're making that is related to real estate or built on real estate. If that's the case, then the magic word still holds. Okay, location, location, location. It's no secret. I'm not telling you something new. I know many of you guys know that. But still, when people say, oh, I'm building this product or this building, and it's going to result 25% ROI, and the building is in boonies where nobody goes, and you get attracted to that 25% carrot, that's like an easy mistake that could have been avoided if you have just looked at where is that property located at. You know, um, spend some time. What have properties done in that area in last 10, 20, 30 years? What kind of rent are they generating? What kind of income people who live in those areas are making? What kind of jobs are there? How many properties are owned by investors versus how many properties are owned by uh, local owners? You got to know all that stuff. So location, location, location. Another one. Let's say if the property requires, and this one I guess goes for businesses as well. If you're trying to put money in businesses, let's say what is the requirement? What's the capacity? The requirement might be, let's say $100,000. I'm making that up. Okay. Out of that $100,000, what is their operating cost? Let's say operating cost is $50,000. Okay. So if you put $100,000, that means they have 2 years of operating costs, providing they don't have to spend any money on anything else. Well, how long can they survive? We just saw that COVID hit and we were down for almost 2 years, completely down, and even third year was kind of shaky. So if businesses has to be shut down, they will be down by almost 3 years. So do they have enough cash reserve to survive at least 3 years? Or better yet, can this business survive even when other things are shut down? Something to think about. Who will run that business or property? Who will manage it? What is their background like? Don't go by their LinkedIn profile. Take a look. What kind of legal background they have. Have they done bankruptcies? Have they have any kind of lawsuits? What other businesses they have done in past? What kind of people they partner with? Check all that out. You can hire somebody. By the way, you know that, right? You can hire somebody. There are plenty of companies. I'm not going to name one because I don't want to name a particular vendor, but you can go online and you can hire somebody and they can do a background check for you. Do a background check on them. See what you find. Why are you investing money without doing background checks? I don't get that. Okay. So understand who will be running the business. Extremely important. If you can't answer that question, then don't move forward. Now, Peter Lynch once said that, look, if you're investing in a company and you're investing based on a good manager, good CEO, then that's a mistake because, sometime that company will have a bad manager, will have to live with that, somebody who's making bad decisions. But the company should be good enough to survive that bad management. Hopefully sooner or later somebody going to recognize that this guy or gal is not making good decisions and replace them. But that same rule doesn't apply in small business. See, in small business, we got to have good managers because we don't have the backing, we don't have the reserves to wait that long. We need to be able to do things fast. What other than the management, who else are their team members that are involved in the project? What is their track record? What about the track record of the asset itself that you're buying? How is competition doing? Have you searched? Have you find out what else can you buy? Oftentimes you will see people who try to do the fraud, they will present themselves as the only opportunity in town. If somebody comes in, look, I'm the only one. You can't do it anywhere else. Just run away. You don't want to be in that business anyway. You want to be in a business where there is some competition, where you can do some comparison. Once in a while you will have a Tesla. Once in a while. It doesn't happen that often. And And if that product is good, soon they're going to have competition anyway, just like what we're seeing with electric vehicles right now. Okay. Another thing you want to find out is how much money, somebody who is trying to sell you that product, could be anyone. If they're trying to sell you a product that, hey, give an example. Let's just say somebody says, buy annuities. Okay. And they are coming to you, buy $1 million annuity. Ask them, how much annuity have you bought? Can you show me? Do you own $1 million annuity? Somebody says, hey, buy a $5 million life insurance. Ask them how much life insurance they have bought. Check that out. If somebody's telling you to invest in small business, how much money they have put in small business. What are they doing with their own money? So important. Don't ignore that. Do they have any debt? How is that debt structured? In what condition that debt can be called upon? You need to know all that. And if you are not sure about all that, it's a good idea to run that company by your tax advisor, especially if that tax advisor is trained into looking out for businesses. And have them answer these questions for you. Get a third opinion. Let's say if you're going to spend $100,000, why spend $100,000 without booking an appointment with your tax advisor? I honestly don't really see any value in it. And I'm not just talking about from tax perspective. I'm talking about all the other things. If nothing else, they should be able to guide you and at least bring up all these points to your attention. And if they're not, then maybe you need to look for a different tax advisor, somebody who is trained. So that would be my recommendation. Another thing, which is probably the biggest of all, which scares me all the time when people try to do business with people they don't know. And I guess in the market, we do that all the time. We have to do business with people we don't know. And that is fraud. You got to be able to identify fraud, who is lying to you. That's so important. If you can't identify fraud, then you can lose a lot. Poor management, yes, that can be costly. Not enough cash reserves, that can be costly. But fraud, that can kill an investment. Okay, so let me give you some tips as to how you can recognize fraud. Number one, ask for audited financial statements. Remember, the keyword is audited. You can ask me a financial statement, and I can write it and give it to you. So the recent Trump case, although we're in 2024 right now, and I think those of you guys watching right now probably remember there's a lawsuit going on in Trump where the Trump has filed some financial reports claiming certain asset values, and now the various states are saying those asset values were wrong. They were designed to fraud the banks, or the lenders, because by showing those financial statements, he got some loan. This is the easiest one, right? So people who try to do fraud often will do that. Now, I'm not saying Trump did any fraud. I don't know. I haven't seen those financial statements. I have not investigated what were the values of the assets. So that's not what I'm trying to say. That's for other people to determine. I'm trying to get your attention to the concept. So anybody can write up a financial statement. Just because somebody gave you a financial statement doesn't mean that financial statement is any good. Find out who audited that financial statement. It needs to be some recognized firm. And you can hold them accountable. You can ask them, hey, you can reach out to that firm and say, look, I'm about to invest with this company, and I see that you have audited this financial statement. I want to get confirmation that you can attach the financial, that you have partially checked these numbers and they're authentic and you approve them. If there's slight chance of fraud, you would not get a response back. Those people will not get back to you. So important to get the financial statement checked out. Operating incomes, extremely, if you don't trust them and it's a small business, you can ask for bank statements. Just because somebody gave you some number doesn't mean they're true. You can ask for bank statements. Okay. Like I said earlier, do deep background checks on the people managing, people promoting, all the links, all the major links in the puzzle, their key staff, their principals, all the major people involved in the deal, do a deep background check on them. If they're involved, if they're trying to sell you something, do that. Okay. Um, if they are linked with other parties in the deal, if there are other people involved in it, do background check on them. And don't forget about yourself. I mean, how do you feel about them? When you talk to those people, that particular guy or gal, what's your gut telling you? What do you think about them? That's also important. I mean, sometimes you can sense when somebody is lying to you, somebody's trying to oversell to you. Your heart tells you. Pay attention to that. Okay. Um, if you could, go visit those sites. Where are they located? Remember, location, location, location. If you can't visit, ask somebody else to visit. Now, these days we have Google Maps. You can, try to pull things up on Google if you can. What kind of things pop up on Google for them? What other company names have they operated in past? Look at all that. So if you follow some of those things, I think that can help you save some time, headache, and of course money by you not investing in that fraud company. But I'll leave you with this one last thought. No matter what you do, no matter how good you are, no matter who you talk to, there's always a possibility that you can still make a mistake. So just because you did everything does not mean you're good to go, you're out of woods, and nothing bad will happen. It can happen anyways. So be prepared for that. So like I said, my rule number 3 always come into play. How much can you afford to lose? Always ask that question to yourself. And if you do that, you'll end up making some good decisions. I hope you find this information very helpful. If you like it, share it with your friends. And I invite you to join a couple of my groups. So we meet up once every 2 weeks. It's on Zoom. It's a financial outlook meeting where we try to make sense of all the news that's happening around us, compare it with the past, and see if we can make some sense out of it. So my goal is to save you some time, save you some energy, help you make some better decisions. So join that. I run a small business advisory group where I tell small businesses, not just about how to manage your business from tax perspective, but we take a look at sales, we take a look at marketing, we take a look at operations. We focus on how to grow your small business. I think that can be very helpful to you as well. So once again, thank you so much for watching this video, joining me for this wonderful podcast today. And I look forward to talking to you guys very, very soon again. Till then, goodbye.